Are you watching all the talking heads on TV push this sudden idea of all this optimism in our economy and the markets while completely ignoring the truth of what's really going on? I'm hoping the reason why you're watching this video and not just the news that they're giving you is because your gut tells you that they're not telling you everything. And you'd be right. So listen carefully as I break down the truth behind the headlines and how it affects you and what's really happening in three major economies that could trigger the global collapse. All that and more coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies to help you survive and thrive through the coming crisis. Well, it's already begun. And so today I'm going to break down some news headlines, and I'm going to start with stock investors take a chill pill. Remember how abysmal things were just, a little bit more than a week ago? Magically, though nothing has really changed, things have gotten so much better. Even though just a week ago, Wells Fargo was telling you to hold off on stocks because they're confused about the near-term direction, and they do not recommend putting any new money to work at these levels, and they'd rather see you take some profits. Now, really, a lot of what they're hoping for is the cash hoard. The cash hoard fuels hope rally will go on. Okay, well, we're going to look at some of this because today what the talking heads were telling me was that the bullish calls for retail investors, so that's really kind of the naive guys that don't really know everything, that they have the highest level of bullish calls, so positive calls, since last May, and the bears, so negative calls, the lowest since last May. Woohoo! Why, they say? Because all of a sudden, analysts magically became optimistic. And now, of course, we're seeing the stock markets are making new highs, even though the internals are showing that they are severely overbought. But this is a good thing. But this next slide, I really want you to pay attention to really, really closely because it is a significant pattern shift. And what you're looking at on this graph is margin debt, so borrowing to buy stocks versus the S&P 500, so versus the stock market. And what you see here is, number one, a pattern shift and a decoupling. Margin, the level of margin has dropped to the most that it has since going back to 2008 in the month of September. So now I think all of this, it's kind of interesting. I don't know if all of this is coincidence or how it happens, but I think it's not really an accident that all this Fed injection has come as the margin has been dropping. This is really significant because borrowing to buy stocks has been part of what has supported the stock market. Now, I'm not talking about corporations taking on debt. I'm talking about individual investors borrowing to buy stocks. In the meantime, you have the valuations. When you look at the value of the stocks in terms of their price earnings around the world, the U.S. has, India has the highest level, 24 times earnings, with the U.S. coming in at 20. Now, normally, the historic average is 15 times earnings. So this is telling you, plus lots of other things I've shown you, how overvalued the global markets are. At the same time, we're having this battle with interest rates, where the markets are pushing interest rates up and the central banks, they're between a rock and a hard place because the ECB, which is the European Central Bank, says it's reasonable to assume rates are near bottom. And what he's really talking about here is that they have figured out finally that negative interest rates don't work. Period. End of discussion. So what happens when they raise the rates? Well, that's bad for the debt markets and therefore the stock markets. But they don't want the rates to go down low because according to the IMF, we're sitting on 188 trillion in debt. Global debt, both public and private, has reached an all-time high of 188 trillion. This amounts to 230% of world output. That's up from 164 million in 2016. That's a trillion. What am I talking about? So that's what? Another 24 trillion in just a couple of years. The bottom line is that high debt burdens have left many governments, companies, and households vulnerable to a sudden tightening of financial conditions. In other words, interest rates moving up, central banks not creating all of this new money. That puts everybody in a bind. And you can see from this graph how many countries are still below zero. And yet, as we just saw in a previous post that I did, the peak of negative rate debt, and that would be both corporate and sovereign, was 17 trillion in August, and it's now at 12.5 trillion. So it's dropped, what, 4.5 trillion? Yeah. That is really significant because it's not that it's gone away. Megan, I need your pen. It's that the interest rates, I have to keep one here really, but it's that the interest rates go up and that impacts the market value of the bonds. Plus, as they have to roll all of this debt over, because that's what most of it is about, then it means that they're going to be paying more for it. But the global economy, this is huge, is on thin ice with a frail trio from China to Germany. So Germany's economy has taken a hit from the global manufacturing slump, and the only reason that it just barely missed being classified as a recession was because they revised the numbers from last month. So they are in deep trouble. In the meantime, Japan's economy hits the skids and things are likely to get worse. Their GDP has sunken a lot more quickly than anybody has anticipated, and they have a new sales tax coming into play, which is why they're saying it's likely to get worse. You're talking about two huge economies, but what about China? Because their investment growth slows to a record low. Here it is. This is a record low. Private investment slows faster than spending by state authorized enterprises. And all of these drivers, exports, industrial output, retail sales, and remember, they're counting on the consumer, cumulative fixed asset investment, in other words, corporations investing in their business, are really, well, that's not, exports aren't at new lows, but they have declined substantially. Everything else has declined as well. So we can't count on China. But they're also getting ready to roll out their new digital Yuan. And we know recently, actually, that if you're a tourist going to China, because everything is on that digital wallet these days, that it's very hard if you want to pay for anything with cash. So while they're going to say they're not going to replace physical money completely, they pretty much already have. So I think this is just to formalize it, keeping it more in control of the government and not quite as much, although the government controls anything anyway. Taking on top of that they're dealing with all of the violence in Hong Kong. So this whole movement between the haves and the have-nots and this populist movement to take back control, this is not going away. This has now been going on for quite some time. More than 260 people were arrested on Monday, bringing that total number to 3,000. But it's a wide movement that goes through a lot of layers of the economy, from students to regular people. Moving on, Zimbabwe, which has been in hyperinflation and their currency collapsed in 2006, well, they've issued new banknotes, but they're trying to control the inflation and take back control of their currency. But they have strict withdrawal limits, $19 a week, and so you have people lining up to get that little bit. The only consolation is that today I got my money, but the problem is that it's not enough to last the whole week since I used public transportation. Okay, that's a bit of a problem. Moving on quickly, and remember, all of these links can be found on our blog. Lebanon offers bank dollars as a haircut, so they don't want to bail in their depositors yet. We'll keep paying attention to this because they were closed for a while. They reopened on November after a 2-week closure, but they have been trying to eliminate capital flight. In other words, bank runs, you pulling your money out. So they've blocked a lot of transfers abroad. Lebanon happens to count on money coming into the country from expats or Lebanese that now live in different parts of the world and send money into Lebanon. So that's it for today, for this moment. And remember, you can find all the links for this on our blog. Keep in mind that financial shields are made of physical metals, gold and silver. And until tomorrow, please be safe out there. Bye-bye.